It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Stocks slipping in Asia as fallout spreads from Nvidia's underwhelming results. Local chip makers feeling the effects as the outlook threatens to cool an AI frenzy that's powered global equities this year. Also ahead, we speak live with Air New Zealand CEO Greg Foran and the regional travel outlook after a full-year profit miss. Plus, Mukesh Ambani set to deliver his annual address to Reliance shareholders. We'll be watching for clues on plans for retail and telecom IPOs. Right, first though, let's check in on how markets are doing. Avril Hong is in Singapore. Avril.
Yeah, Paul, we're seeing a risk-off day. I mean, after all, it is that earnings report that's turned into the global macro event of the week. We're, of course, talking about those Nvidia results. To be clear, they were a solid set of numbers, and we got a beat, but I think it was the slimmest in 6 quarters. The concerns also about the forecast disappointing. Concerns also about the Blackwell lineup. So it is risk-off in the region. Tech getting hard hit, as well as you can see on your screens there. And also, if you take a look at what we're seeing in some of the chip names specifically, you'll see that they're actually declining by roughly the most in about 3 weeks. If you flip the board, SK Hynix, Samsung Electronics, Taiwan Semiconductor also all down in trade today. Paul.
All right, thanks very much, Avril. We did hear earlier from Nvidia CEO Jen-Hsun Huang in an exclusive interview with Bloomberg, and he tried to ease investor concerns, saying the firm is ramping up production of the Blackwell chip.
We made a mass change to improve the yield. Functionality of Blackwell is wonderful. We're sampling Blackwell all over the world today. We show people, giving tours to people of the Blackwell systems that we have up and running. You could find pictures of Blackwell systems all over the web. We have started volume production. Volume production will ship in Q4. Q4, we will have billions of dollars of Blackwell revenues, and we will ramp from there. We will ramp from there. The demand for Blackwell far exceeds its supply, of course, in the beginning, because the demand is so great. But we're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Jen-Hsun, what is the demand for accelerated computing beyond the hyperscalers and Meta?
Hyperscalers represent about 45% of our total data center business. We're relatively diversified today. We have hyperscalers, we have internet service providers, we have sovereign AIs, we have industries, enterprises. So it's fairly diversified. Outside of hyperscalers is the other 55%. Now, the application use across all of that data center starts with accelerated computing. Accelerated computing does everything, of course, from the models, the things that we know about, which is generative AI, and that gets most of the attention. But at the core, we also do database processing, pre and post processing of data before you use it for generative AI, transcoding, scientific simulations, computer graphics, of course, image processing, of course. And so there's tons of applications that people use our accelerated computing for, and one of them is generative AI.
That's Nvidia CEO Jen-Hsun Huang speaking exclusively to Bloomberg technology co-anchor Ed Ludlow. Well, let's dig in a bit deeper into those results. Bloomberg Intelligence senior analyst Robert Lee joins us. Robert, Jen-Hsun Huang sounding fairly upbeat there. So what's the real issue? Was it a disappointing forecast from Nvidia, or was it just extremely high expectations from the market?
I think it's more the latter. Again, it's the slight mismatch between expectations and reality. So I think, on fundamentals, nothing's changed. There is some execution risk on Blackwell, particularly into next year, because ramping that thing up from low volume production into high volume is a non-trivial task. So I think there is still residual risk there, and people need to bear that in mind when they're looking at the outlook into next year. But the numbers themselves beat slightly. The guidance was slightly above the mid-range of where consensus was. But I think, again, the market was pricing in and expecting more of that. Or more than that, I should say. So, again, it's this mismatch of expectations, which is why you're getting profit-taking.
Yeah, not quite the blowout that analysts and investors have been accustomed to when it comes to Nvidia. But, when you look at some of these ramp-ups, that's something that really came up when he spoke to us. Do you think it's going to be able to offset by the time the fourth quarter comes along? And what are you thinking about in terms of the existing production lineup, in terms of, the broader availability?
Yeah, I know he made some questions about, supply being relatively unconstrained. But, they're totally reliant on one production partner, that being TSMC in Taiwan, as well as the, availability of chips from partners such as Hynix as well, being another potential constraining factor. But I think there's such rampant demand for their existing products, that will underpin their revenue over the next few quarters. But just take a step back. I mean, the headline growth metrics this company delivered are still pretty stellar, but there is a noticeable slowdown. This business was year-over-year revenue growth per quarter was 250, 260% in the 2 quarters prior to that. So obviously this quarter's growth did not match that. There's been a noticeable slowdown, and it will slow down further into next quarter. So again, whilst the headline numbers are still pretty good, there, versus where we were and versus expectations, I think that's the key to why we're seeing some profit taking in the market. There are, again, more medium-term questions about the sustainability of demand, the fact that I think, these hyperscalers at the moment are locked in a sort of arms race to try and outbid and outdo each other to build up capacity, but I don't think they're monetizing anywhere fast enough at the moment, and I think that concern potentially comes to the fore into the end of this year and into next year. Because if the customers are spending tens of billions per quarter on CapEx, they need to monetize it. And I think those profits and those money from customers is not coming through at a fast enough rate at the moment.
Okay, so you mentioned some profit taking today, but if we look at the share price for Nvidia this year, it's more than doubled, and that follows a 239% increase in 2023. So what are analysts saying about the investability of this stock? Is there more upside to come?
Well, that's it. I mean, it's this classic phrase, beat and raise. So I suppose we've had, multiple quarters of beat and raise, but as Avril said in her intro, the incremental beat, I think for the quarter, that's just reported on the top line was the slowest beat in about 6 quarters. So the rate of, if you like, the second derivative is slowing down. So again, this has no real implications on the fundamentals for the company. It's about what's priced in. It's about what what's priced into the valuation or what the market is expecting. And clearly, the market has been expecting more than this company can deliver. So I think analysts maintain a bullish fundamental view, which appears justified at the moment. It's more a question about how much you want to pay for this stock. I think that's the key issue.
All right, Bloomberg Intelligence senior analyst Robert Lee there. Let's get some more on Nvidia's results and their ramifications for broader markets. We're joined by Kaya Parv, CIO of CrediLinq.Ai, a technology infrastructure company. Kaya, we just saw a graphic on the screen there showing Nvidia trading at 30.5 times forward earnings. Now that we have these results in the bag, would you buy at these levels?
Good morning, Paul. Thank you so much for having me. Wow, what a situation to be. We are seeing the second largest company in the world basically delivering stellar results, and the markets are disappointing. What does that tell us? It means that we are still in a risk-on mode. As we can see, we are still in a V-shaped recovery from S&P as well as NASDAQ perspective. But I think the sentiment is changing a little bit. The markets are expecting more, the investors are expecting more, and because Nvidia is not exceeding those expectations to the point whereby market is rewarding them, there is a bit of pullback. There is a bit of correction, which in my view is only healthy and it's only welcome given how extended we are on the AI narrative.
Kaya, is this to you an AI boom that has matured or is maturing?
Avril, I would say that AI boom probably is just having a bit of a pause. The first euphoria, if you will, is definitely showing signs of fatigue. And I think the industry is maturing a little bit. The initial, I would say, investor enthusiasm once we saw generative AI being introduced and having broader use cases has now been priced in. What we haven't really seen is practical use cases. We haven't seen that productivity gain yet. We haven't seen wide use cases across all industries. Obviously, those big companies, Meta's, Google's, as well as Amazon, they are all in the AI game. We can see that from Nvidia's own earnings, given that 40% of revenue is coming from these big companies. But I think what we're going to see going forward is a bit wider adoption of AI in different verticals, different industries. And hopefully we see a little bit of more innovation as well, not just building on top of existing solutions, but also completely new use case, maybe another GPT being developed.
Well, over the past couple of years, we have seen Nvidia and its incredible results really pushing equities more broadly higher. But if things are starting to quieten down in terms of the AI view, this is our question of the day. What can replace Nvidia as the equities driver?
Now, that's a great question. And I would say what has pushed markets up, obviously, is the AI boom, but also I would say it's the potential soft landing. So I would say that a lot of the equity market returns will be a product of what we can see in the economy. Strong view that once we are seeing any recession, we're going to see correction in the markets anyway. So we're not going to have a strong driver, not in the US, not in Europe, and definitely not in China. So once the economy has gotten to a place that we can see some expansion, hopefully in the form of PMIs, be it in manufacturing or services, then maybe another driver could come in the US. I think that could rather be the cyclical companies, which have been performing fairly well, as well as defensive companies. I think the tech probably will be a bit of laggard going forward, since the big money has been done that shift from tech to cyclicals as well as to defensive.
Do you think perhaps this slowdown in a waning enthusiasm for the AI story could be the trigger point for a broader correction, and perhaps we're about to see the Fed ride to the rescue in that regard?
There could be a bit of a correction. I'm not going to say that we're going to see the markets to roll over and die here. Correction could be due. I would foresee anything between maybe 5 to 10%. Again, in order to see a deeper correction or even bear market, we would have to see recession. And this is something that history also agrees with. Once we have a recession, we see at least 20, 30% pullback, and we also see the Fed cutting rates, anything, let's say, to 400 to 500 basis points. I don't think we are at that place yet. I think the markets are still in a risk-on mode. The data point I use is looking at the V-shaped recovery we have seen within the last couple of weeks when we had the yen event, or let's call it the carry trade unwind. So there's still a bit of time to go before we see a severe pullback. But I expect choppy markets from now at least until the election season. I wouldn't say the markets are going to go up. I think we're going to see a bit of sideways movement. So it's a great traders market. We're going to see volatility.
Amid the chop that you expect then between now and, say, November, are you looking more into markets that have perhaps less AI exposure then?
Avril, absolutely. I would say that probably allocation towards, again, defensive and industrial could be a good idea. Having said that, once we have, or when we have a correction, I foresee equities suffering in general. There could be some elements of overperformance in these cyclical and defensive sectors, but I would say a good allocation probably for the foreseeable future or medium term could be long gold, I would say long cash, and also long US dollar. And this is predominantly because we are still seeing geopolitical tension. We are still seeing central banks moving away from US dollar. We are seeing especially Asian central banks allocating towards gold. And also the fact that the markets are pricing in 100 basis points cuts until the end of the year. I think this is a bit rich. I think the markets will disappoint, or rather Jay Powell will disappoint the markets on that, which means that the dollar could have a bit of a support, cash could have a bit of a support, and gold also could be picking up a little bit from already very high levels.
Kaya, do you see credit quality improving in this part of the world? I mean, given how we're expecting all these rate cuts to come, albeit maybe a bit shallower than what we're expecting from the Federal Reserve.
Unfortunately, I don't see credit quality improving just yet. We are at the tail end of the credit cycle, but I think a lot of the delinquencies and non-performing loans and companies are yet to emerge. It takes a bit of time for the monetary policy to trickle into real economy. And once we start seeing those refinancing cycles in the US already happening, in Asia not so much, I think we could see a bit more credit events. There is definitely an element of distress in the private markets in this part of the world, evident from slowdown in fintech and startup investments into Southeast Asia, which is down anything between 60 to 80%. So it always starts from the peripheral markets, and then it gets to bigger companies and as well as bigger markets. So still a bit of time until we can see improvement, I think.
Kaya, I just want to circle back to your remarks there on the US dollar, how you're long dollar. It seems somewhat contrarian considering the rates divergence story. You know, we have the Fed's next move likely to be down, the Bank of Japan's next move likely to be up. Can you dig into your reasoning a little bit more for us?
I am suspicious and a bit unsure whether Bank of Japan is going to deliver that rate hike. I have a feeling that the BOJ is fairly scared of the market reaction, even though they had signaled the rate hike would be on the cards before the previous hike, and we saw what happened. I would say one of the biggest risks in the markets right now is a dollar-yen nearing 140. That could trigger another round of the vol trade and the carry trade unwind. And that definitely will be a vol event across all markets. So hence, I think maybe BOJ will be a bit more cautious with their hike. And like I said earlier, I don't think that the Fed is going to cut as much as the markets have priced in. So my narrative and my thesis that the dollar could be stronger is predominantly because of less than expected rate cuts, geopolitical risk.
All right, Kaya Pav, CIO of CrediLinq.Ai, thank you so much for joining us. Still to come on Bloomberg Markets Asia, interview with the CEO of Air New Zealand. We'll discuss their plans for growth after a full-year profit miss. That's coming up later this hour. This is Bloomberg. Well, Nvidia's been stealing the spotlight, but it's not all about Nvidia earnings. Investors are also weighing results from major Chinese tech and auto firms. Let's bring in our tech reporter Annabelle Drillers now for more. So, Annabelle, talk to us about shares in Meituan popping today. What's going on?
Yeah, we're actually seeing the biggest gain in about 6 months for the company. I think this is really a firm that stands out from the rest of the pack this Chinese earnings season, because one of the big concerns for tech companies and for also just consumer-facing companies in China has been the twin threat. you've not only got the economic issues, consumers are very reluctant to spend right now, as we know in China, and then you can add to that the extreme competitive pressures, and we see that within different industry segments across China, just intense competition. So Meituan has really been not only being able to fend off its rivals in this space, more incumbents, because Meituan is generally a food delivery service, so that's the sort of core offering. It's got a lot of different delivery service and auxiliary services around that. But in addition to that, they've been able to fend off the competition and also to post some strong numbers here. So actually we saw the core local commerce division rising a better than expected 19%. The expectation had been for growth of 17%. What else really stood out was the share buyback for the company as well, approving a $1 billion share buyback. We've already seen them buying back shares again, another major theme for the Chinese tech numbers this reporting season. But it is supportive, and so you've seen that stock there rising today. It has done better than the likes of Alibaba and JD.com. You've seen that chart there, perfect timing, but it has done better than those names throughout the course of 2024.
Belle, when it comes to competition, we're also seeing that intensely in the Chinese EV space. I mean, what is that going to mean for BYD and Li Auto going forward?
Well, again, BYD, not just a pure EV maker, they're of course one of the largest EV makers, or rather automakers, if not the biggest inside China. But where BYD again has been successful is continuing to maintain and expand its market presence. And so that again came out on these latest numbers. We saw them reporting a solid first half net income rise to 13.63 billion yuan. So it was a jump from the year earlier. We had likes of analysts from Barclays saying the results were impressive compared to the losses that you're seeing within local global peers that they've been incurring for some time. Sales hitting a record, you can see in the chart there. Despite that, actually, though, the shares are under pressure today, down as much as 4%. And I was just actually speaking with the transport team about this. Why are we seeing the losses today? And it does seem that when you survey the analyst projections coming into this, even though we saw them beating, it didn't quite beat the highest end of the range, and that's why you're seeing that share price reaction today, possibly.
All right, thanks very much, Belle. We have plenty more ahead. Stay with us. This is Bloomberg. All right, let's take a look at some of the stocks that we are watching. You're seeing here some South Korean K-pop stocks not doing particularly well. SM Entertainment now off 4.4%. It was off as much as 5.5%. This is following Morgan Stanley's price target cut. Also reports of sexual offence allegations involving one of the agency's artists. This is a member of the boy band NCT. Left the team after he was accused of sexual offence allegations. That's according to reports from Yonhap News. So seeing second quarter results also not great for JYP, YG and SM as well. Take a look at Vietnam banks as well. We're seeing Vietnamese bank shares rising. This is after the central bank said it would allow lenders to have credit growth, reducing the risk of this is credit growth reaching 80% of their assigned targets. This would increase lending quotas. State Bank of Vietnam reiterating orders to lenders to boost credit growth while curbing bad debt. So he's had Vientiane Bank rising as much as 1.3% to its highest since April 15. ACB, BIDV and Military Bank all rising as well to at least 1.2%. The benchmark VN index, meanwhile, that climbed 0.4%, extending some impressive gains that we've seen this year in Vietnam out to 14%. Here's a look at some of the things that are moving on global markets. We are seeing a little bit of a down day. Those results from Nvidia, as we discussed, didn't shoot out the lights as the market was expecting, leading to a little bit of risk-off sentiment around the region. We'll take a closer look at markets in a moment. This is Bloomberg. Welcome back. We've just got China markets heading to lunch. We have the CSI 300 pretty much flat at the moment, just off by a couple of points. The Shanghai Composite a bit softer by 0.4%. We've got shares in BYD falling a little bit as well. This is despite reporting a 24% increase in first half income. The car maker really just getting caught in the downdraft of a broader negative sentiment. The yuan there, 712.21 at the moment. Let's take a look at markets elsewhere in Asia. Avril.
Yeah, Paul, we're seeing Japan stocks a bit lower today, but actually not by much. It's really interesting, given how one of our guests earlier on in the program says this Nvidia earnings scorecard is not necessarily risk-off. It's just maybe prompting a bit of recalibration in the market. Certainly, the tech shares are the ones that are getting hit. We're still seeing Tokyo Electron in negative territory, but pairing the declines from earlier in the session of much upwards of 1%. Now, we're also seeing, I think, that pairing in the Nikkei as we come back from the lunch break. So maybe there is some chance that we see a bit of a recouping of those declines from earlier on in the session as cooler heads prevail. It was, after all, for Nvidia, a really solid scorecard. It was just that this bar was so high and investors were so used to it, beating lofty expectations that, you know, what came in failed to impress. So we're seeing among some of these chip names in the rest of the region, those declines as well. SK Hynix down by about 6%. That is the big decliner there. And this is, I think, the steepest loss in about 3 weeks. We're also keeping a close watch on the currencies. Of course, the Japanese yen is sitting about 144.5 at the moment, Paul.
All right, thanks, Avril. Let's get some more now from Bloomberg Technology's exclusive interview with Nvidia CEO Jen-Hsun, who told us about the government deals driving so-called sovereign AI.
It's not necessarily, sometimes it's deals with a particular regional service provider that's been funded by the government. And oftentimes that's the case. In the case of Japan, for example, the Japanese government came out and offered subsidies of a couple $1 billion, I think, for several different internet companies and telcos to be able to fund their AI infrastructure. India has a sovereign AI initiative going, and they're building their AI infrastructure. Canada, the UK, France, Italy, I'm missing somebody. Singapore, Malaysia, you know, a large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Jen-Hsun, you use the word resource, and that makes me think about the energy requirements here. I think on the call you talked about how the next generation models will have many orders of magnitude greater compute needs. But how will the energy needs increase, and what is the advantage you feel Nvidia has in that sense?
Well, the most important thing that we do is increase the performance and efficiency of our next generation. So Blackwell is many times more performant than Hopper at the same level of power used. And so that's energy efficiency. More performance with the same amount of power, or same performance at a lower power. And that's number one. And the second is using liquid cooling. We support air cooling, we support liquid cooling, but liquid cooling is a lot more energy efficient. And so the combination of that, all of that, you're going to get a pretty large step up.
It's Nvidia CEO Jen-Hsun speaking exclusively to Bloomberg Technology co-anchor Ed Ludlow. Let's take a look at airline stocks here in Australia and New Zealand. We've got Qantas shares just turning flat at the moment. They were in negative territory for much of the day. This is after Qantas reported a full-year profit that pretty much came in line with estimates. We're seeing a little bit of weakness in Air New Zealand shares, though, down about 0.9%. This is after a miss in full-year profits, some tough trading conditions there. Let's discuss Air New Zealand's earnings a little bit more now. We're joined by CEO Greg Foran from Auckland, New Zealand. Greg, thank you so much for your time today. You did note in your earnings announcement just how tough those trading conditions have been. You expect them to continue into the first half. When do you see things improving?
Look, we're hopeful that the second half will be a little bit better, Paul, but certainly for this first half, we do expect it to be quite challenging domestically. The fleet challenges that we've got will actually go on for a little bit longer than that, but we're hoping the domestic economy starts to pick up once we get through Christmas and into the next year.
Hoping the domestic economy picks up, but there is an elevated risk of recession in New Zealand at the moment. If this comes to pass, what are the implications for domestic routes in particular and domestic demand?
Well, we've got a job to do to connect people, so we'll continue to be out there and we'll stimulate the market as we have been by ensuring that the flights are there and the prices are good. But, you know, look, I think we're probably at about the bottom of the cycle at this stage, and I think it'll be with us for a while. But I do have some optimism that, you know, February, March next year, the New Zealand economy will start to pick up. And, you know, I was looking at a report just a few hours ago showing that confidence was starting to return. So, as I said, I've got some optimism.
You also estimate that fleet availability issues hit earnings by about 100 million New Zealand dollars net of compensation. How much compensation have you received so far?
Yeah, look, that's a number that we don't share for commercial reasons. You know, these engines, unfortunately, are out of warranty. They do happen to be reasonably new engines, but out of the warranty period. And that $100 million is what we know, if you like, are the hard costs that we incur. You know, there's probably another 50 million worth of soft costs that you end up incurring when you've got pretty significant disruption. You know, today, you know, we're not a big airline. Today, we have 4 of our 14 787s that we can't fly. You know, we just don't have engines from Rolls-Royce available for them to fly. And then we've got 6 of our 17 A321s that also are on ground as we deal with Pratt & Whitney. So, you know, we've unfortunately, and this doesn't apply to every airline, it just depends on what choice you made on engines, we've ended up with a couple of challenging ones here.
Do you have a timeline in mind in terms of how much longer this operational impact is going to last?
Yeah, so it's not a straight line, as you can imagine, but it will be with us for a couple of years, and we would expect that over that 2-year period, the amount of aircraft that we have that are unavailable reduces down. So instead of having 4 or 3 of the 787s, you start to get down to 2 and 3, and then 1 and 2, and then 0 and 1. But, you know, we think that'll be with us for a couple of years, and similar with Pratt & Whitney. We don't expect it to get worse. But, you know, that 6 becomes 5 and then 4 and then 3 and then 2, but for a couple of years. In the interim, we've got out there and leased 3 more 777s. We've got a couple more Airbuses coming in next year that we've been able to lease. So we're doing our best to fill the shortfall, but as you can imagine, that creates a little bit more complexity when you bring in different planes. And obviously has an impact on earnings, and that's what you're seeing. But, you know, those are the things that you deal with in this industry, and there's no guarantee that, you know, you can get a clear run. And unfortunately, not long after we've had a record performance, which we did last year at 585 million, here we are, you know, back at 222 million because we're dealing with a number of these issues.
Let's talk a little bit about some of your non-fuel costs, I'm meaning particularly labour, wage-related costs. Are you looking at staffing levels? Is there a potential to reduce these?
Yeah, we've taken some action already. Our view is that, of course, you trim your sails based on the environment, but you also take your lessons from COVID. So, we know that the fleet starts to come right. We know how important it is to have pilots that are trained, cabin crew and trained. So we've actually increased numbers recently in a couple of those areas, and the same with maintenance. You need, trained engineers to repair planes. What we have done is we've taken about 400 people out of support office functions, and that's been quite sort of forensically done, well done by the team. So that's got some costs out, sort of circa 20 million in labour, and then there's another sort of 15 million of other miscellaneous costs that we've been able to pull out. So, it's doing what's right short term, but always with an eye that, this is going to come right, the economy will turn, the fleet health improves, and probably competition also changes. So, I'm comfortable with where we're at.
We've got a relatively weak New Zealand dollar at the moment, which obviously makes New Zealand an appealing destination for international tourists, but at the same time, most developed economies are also experiencing a cost of living crisis. So in that context, how's demand for international air travel holding up?
Yeah, not too bad. I would say to you that out of America, where their dollar is strong and ours is weak, we're holding up pretty well out of that, and plenty of capacity. Capacity from the US into New Zealand is actually up about 52% on where it is traditionally. So no shortage of planes flying here. I think everyone would like them to be fuller. Canada is particularly strong. Australia is good in terms of inbound. Not too bad out of Japan. Not particularly strong out of China. So, generally it's okay. I would say to you that overall tourism to New Zealand is running at about 82% of pre-COVID. So that has not in total rebounded. A fair amount of that is China that has been slow coming back. So there's an area that, we would like to see, if you like, the ecosystem come together and let's get tourism moving a bit quicker than what it has.
Greg, it sounds to me like it's an okay but not great backdrop. So some challenges towards a more sustained recovery perhaps. And amid all this, Air New Zealand has also dropped its CO2 target for 2030. What is your sense of, how far the industry is lagging in terms of decarbonisation? Two
once again, it's a question for each airline, to be honest with you. We were very, quick 2.5, 3 years ago to put an SBTi target in, and we're comfortable with that. And, that's exactly the right thing to do. New Zealand Inc. represents green. Air New Zealand is part of that, should be green. We've got out there, we've got an electric aircraft coming next year, plenty of other activity we do around sustainability. So why have we reviewed the target? Well, one of the key reasons is fleet. We have orders in for new planes out of Boeing, and those 787s were replacing the 777s. The 78 versus the 777, there's about a 13% fuel saving on that. We're not getting those planes at this stage. We were expecting them initially in 2022. Hopefully we're going to see the first of those at the end of 25. So that's a change. The second thing is SAF production is not quite where we had assumed it would be 2.5 years ago when we started working on this target. So we know that the right thing to do was to actually pull that target and take time over the next few months to reassess it, and that's exactly what we're doing. Our commitment remains as strong as it ever has been around SBTi and reducing carbon. So that's why we did that. I'd make one other quick comment, and that is that it is certainly some headwinds at the moment. But boy, I am so proud of a lot of things we've been doing in the business in terms of, digitizing the business and building infrastructure, whether it's hangars and a whole raft of other things, replatforming our entire loyalty program. So once again, a little bit challenging at the moment, but I'm actually very confident about where our business is placed.
All right, Greg, nice to hear the commitment to sustainability from Air New Zealand still. We'll leave it there for today. Thank you so much for your time. Great having you on with us, Greg Foran, CEO of Air New Zealand. Some breaking news to get you up to speed with as well. We have Japan's 2-year bond sale actually drawing the highest demand ratio since 2019. And against that backdrop, these Japanese bond futures are rising. It looks like those slightly higher yields have managed to draw in investors wanting to lock them in at those levels, Paul.
All right, let's check on the Indian markets. We've got the open just about 10 seconds away now. We may see a little bit of weakness in the open. We have seen stocks in much of Asia a little bit softer on the back of those somewhat lackluster Nvidia earnings. The market did have some lofty expectations there, and there we have it. Stocks opening modestly low. We've got the Sensex off by just 0.1% right now. The Indian rupee still hovering around those record lows, 83.89 at the moment. Still to come, Reliance Chairman Mukesh Ambani is going to deliver his once-a-year public address at the company's AGM today. We'll tell you what to watch out for next. This is Bloomberg. Asia's richest man, Mukesh Ambani, will deliver his once-a-year public address today during Reliance Industries shareholders meeting. Conglomerates reporter PR Sanjay joins us now from Mumbai. So what are the key things we're watching out for today in this AGM? Maybe some news around potential listings?
So this is a very important day for Reliance Industries, India's largest private enterprise. So Street is keenly watching or waiting for the updates of the IPOs. One is Reliance Jio Infocom, which is the telecom venture of Reliance. In 2019, Chairman Mukesh Ambani had hinted about a potential listing in next 5 years. So investors would be keenly watching when will they spin off this telecom venture and they'll get it listed so that it can unlock values, and it will also allow key investors to exit, and they can also make money. And the second bit is also about the Reliance retail venture. It's also hinted about a potential IPO, potential listing. So they would be looking for timeline set by chairman. That's what we want. And the Street is also expecting some big announcement on the fast-moving consumer goods, which is a pet project of Isha Ambani, daughter of Mukesh Ambani, because they had ambitious plans to get into this FMCG, so-called FMCG, fast-moving consumer goods sector. And one last thing would be their aspirations in new energy business. We are expecting that the first gigawatt factories will be opened by this year and calendar year end. So investors and Street, all shareholders will be waiting for the updates, because that is going to be really big. That is going to transform Reliance Industries from a pure fossil fuel obsessed company to a new energy, solar energy, green energy company. So these are the key things business updates would be watching. But one more interesting thing, the bankers, the lenders would also be waiting for the details of the capex, because the digital capex and the telecom capex are moderating, and of course this will have an impact on net debt. It will moderate for sure, but they would be they would be keenly watching out of the next big capex plan, which is very important for the Indian corporate landscape too.
Sanjay, also in the spotlight is this proposed merger between Reliance and Disney India that's since gotten antitrust regulator approval. How important is this?
Oh, that's a great point, because this is one of the headache before Reliance, because this $8.5 billion dollar behemoth media in the making, they were keenly watching like what will be the antitrust regulator, which is Competition Commission of India, would be asking for. So yesterday night that headache is over. They've got a approval with voluntary disclosures or concession that the company would be making, which is not clear. We were awaiting the order to what will be there, and we are also expecting that that this will be one of the points which Chairman will be mentioning. But because this media behemoth will support their ambitions to make Reliance OTT, which is Jio Cinema, to go big, and it can also fuel the aspirations of Jio Fiber, and it can also increase the data consumption for Jio Telecom, Reliance Jio Infocom venture also. So this is going to really circumvent all the aspirations of data, media, OTT space, etc. So this is going to be very important for that. So investors will be keenly waiting what are the big mega media plans for Reliance with this name.
All right, Conglomerates reporter PR Sanjay in Mumbai there. You can also turn to your Bloomberg for more coverage. Go to TLive Go, that's TLIV Go. Get some commentary and analysis from Bloomberg's expert editors. Still to come, we hear from the CEO of the world's biggest vaccine manufacturer, how the Serum Institute of India is preparing for another potential pandemic. That's up next. This is Bloomberg. The head of the world's largest vaccine maker says governments need to invest early in health to protect their economies as well as their people. Serum Institute of India CEO Adar Poonawalla spoke to our colleague Haslinda Amin for the latest edition of Latitude. Here's a preview.
I think a healthier population is always going to be a more productive population, and that's good for the economy, it's good for everything. I think it's common sense. It's just that sometimes the political will isn't there in some of these countries to prioritize. They want to do it, but they have these other priorities. So I hope that they can keep this as a priority, because a workforce that is 20 or 30% down during a pandemic or an outbreak, or is suffering from endemic disease in certain areas, there's certain diseases that keep spreading, is not healthy, it's not productive. And if you want everyone to perform at their best and you want healthcare costs to be down, you don't want to be burdened with insurance costs and other costs. I think it's important to invest early in health, in child health, in women's health, and I hope that continues both in India and other parts.
We know COVID took the world by surprise, and some say disease X is coming sooner than you expect. Is there a sense when disease X might hit the world?
No, I'm not losing sleep over which day and when it's going to come out, but we're definitely prepared. We have a huge testing infrastructure in India, for example. We can detect now, new diseases that can come about, and if they're spreading, then, we can take action. We've got a huge vaccine and pharmaceutical industry in India. So India is very well, I think, poised. But when the crisis comes, we stick to what we've committed. I think that's important. So let's see what happens.
And you can catch the full episode of Latitude with Haslinda Amin premiering today on Bloomberg Television. That's at 8 p.m. Hong Kong time. You can also watch it on our YouTube channel. Before we leave you, let's just check in on how some of these chip names around the Asia-Pacific are performing at the moment. We've got Tokyo Electron coming off session lows, now just off by 0.5%. Renesas, in fact, just dipping into positive territory now. This is after Nvidia sales forecasts missed expectations, although those expectations were fairly lofty. And that is it from Bloomberg Markets Asia. Horizons Middle East and Africa are up next. This is Bloomberg.